This is Keys to Cayman unlocking real estate investment and opportunity in the Cayman Islands. Hosted by Mod Realty, bringing you market insight from the inside. From homes to smart investments, we give you the keys to move with confidence.
Keys to Cayman unlock the market. Own the advantage.
All right. Welcome everybody to Keys to Cayman, a podcast brought to you by your trusted real estate company in the Cayman Islands, Mod Realty. I'm your host, Ashley, and I will be introducing our exciting guests very shortly, but just a couple of things from me. So just before we get started, just a reminder that everything that we discuss on the podcast is based on our professional experience and lived experience within the Cayman Islands property market. The views shared are our own and are not intended to represent any government body, financial institution, or third-party organization. So we are speaking in a capacity as real estate brokers at Mod Realty, and the information shared is for general guidance only, not formal financial or legal advice. So now we've got that out of the way. Welcome, Will. So we have Will Coutney, founder of 7 Mile Mortgage Brokers, and Greg Arnold, head broker. Welcome, guys. How are we doing?
Good to be with you.
Great to have you. So tell us a little bit firstly about who you are, what you do, how long have you been about, and anything you want the audience to know.
Yeah, sure. Greg and I have been working together on this since beginning in 2025. I had the idea a few years ago, to be honest with you. I've lived in Cayman since 2010. And I've had 2 other careers, if you will. And sort of the way this came about was a few years ago, I decided instead of complaining about problems, I tried to undertake to solve them.
Yes.
And so one of those was I noticed that I had one of my best friends back home was a mortgage broker and had success with it, and explained to me what he does. And I said, well, that's funny. We don't have that in the Cayman Islands. And that was concurrent with me personally seeking to obtain a mortgage at the time and having let's call it too difficult time. So I started looking into it and started submitting applications around about 2023. Now that's not true, late 2022, and then had them all kind of come together, and we started up in 2024.
Nice. So you wanted to be the solution so that other people didn't have to face some of the challenges that that you yourself were facing from a personal experience.
Yeah, hopefully. That's the idea. We'll get into that.
Awesome. Well, obviously with this episode, we're going to be looking at kind of the application to approval. So what mortgage brokers actually do, because we are aware that some of our listeners will not be necessarily familiar with, a mortgage broker's kind of remit and what that entails and how to get involved. So we're going to kind of cover some of the ways in which you guys are powerful allies in the home buying journey. We're going to touch on people who are maybe not quote unquote salaried employees that are looking, they're self-employed, touching on that, what Cayman banks are really looking for beyond income as well. So those kind of things that maybe people need to consider when they're looking, to lend and to purchase their property or land. So we're going to dive into it. So just if you can maybe start off by telling us in simple terms, what does a mortgage broker actually do, and kind of what's the difference between going directly to a bank? So
Sure.
An alien's plopped on Earth. They want to know the difference.
Yeah. We'll make it as simple as possible because it's really not complex. I know I'm flogging the service here. So essentially, we act as an agent on behalf of a borrower, right? Somebody that's looking to obtain a mortgage, and will go out to multiple lenders with their information and obtain multiple term sheets. Right? A term sheet being basically like a proposal from a lender to give them money for purpose of, obtaining mortgage, buying their home. That basically serves to allow the person that's looking to borrow money to free up their time, one, to free up their time from engaging directly with a bank, as well as from the duplication of efforts. So it's like, we'll all be aware, it's like they'll ask you to fill out a bunch of forms and submit a bunch of documents and do that 2 or 3 times over in order to have optionality between mortgages. So we do all that legwork and sort of come back and sort of say, here's your 2 or 3 options.
Amazing.
Make suggestions on what's the sort of best way forward. Hopefully not just saving a bunch of time, but also being speedier.
Yeah. Awesome. So there's that time efficiency element, which, I mean, ultimately people are busy, let's say you're working 9 to 5, particularly if you're looking at getting maybe your family home, you're juggling childcare and things like that as well. So it's kind of taking that stress and making things as efficient as possible. So Greg, I don't know if you have anything to add in terms of, what would maybe be an advantage for somebody using a mortgage broker versus somebody who's maybe doing the process on their own and maybe not having that helping hand.
Yeah, I mean, as Will said, one, hopefully, they only have to give the information once and then we can go with that. So just saving the time there. But 2, one of the biggest holdups in mortgages, a lot of times they're just missing information and the borrower doesn't necessarily realize it's missing. And so just making sure that everything is there when you approach the bank, just that alone can help speed up the process.
Because we know a lot of the time, I know obviously with clients, depending on how they're communicating as well, one of the previous episodes, we talked about the power of in-person meetings as well versus email exchange and how things can get lost, things then end up in island time and stuff like that. It can happen, right? So, obviously then if you've maybe done an email exchange, for example, and the majority of documents are there, but maybe there's one thing missing, and then that can obviously delay the whole process. And it's just through it maybe being a first-time buyer and they just simply don't know. So you guys do that due diligence and looking at, okay, this is the checklist, this is what we know, categorically you need to be able to supply. So we're going to make this as, again, time efficient as possible, right?
Yeah, that's the idea. That's the goal.
Yeah, and we act solely on behalf of the borrower, right? So like our motivation is to check that over and make sure everything's included. Where if the broker's not involved and you're going direct, you might submit all that stuff and it could sit. It could sit for a period 2, 3, 4. I mean, you guys tell me 2, 3, 4 weeks, something like that, and then that's no knock on the lender. But then they come back and go, okay, we're ready to move, but we're missing these things, and you might have to go off and obtain those, and that takes a little while, and all that kind of stuff. So it's just removing chunky headaches there.
Yeah, sure. Which everybody can do without, for sure. So okay, people are coming to you, they knock on your door, they drop you an email, they call you up, Will, Greg, I need some help, mortgage brokerage, I've never come to you before. What does that kind of, from a client's perspective, look like step by step in terms of that kind of client journey with you guys?
Yeah. So, I mean, how the step by step would be, after they reach out to us, is we would hopefully meet up in person, because as you said, that can be a lot easier. But if time doesn't permit or whatever, we can certainly do it over email and phone calls. But we then get the standard occupation information, salary information, the purchase price, is it actually under contract already, or are you looking more for a pre-approval type thing? Is there a timeline that you've put in? If you are under contract, what's the timeline that you've given? And just try to gather as much of that information, and then, we can then, with that basic information, we can usually start to get some of the idea of the terms, and in the background still work to get the full application then completed and make sure, the job letter's there, the salary or, verifications there, or other income verifications there, and things like that. We can still be working on that in the background while we're working on the terms. And that, I think, is one of the big advantages too, is when you do go direct to the bank, usually they want that full application immediately, everything. and you're doing that 3-4 times. And don't get me wrong, there's definitely times where when we do reach out to one, they're like, well, we're going to need it all just to see it because this one's a little bit, there's always different circumstances and situations. But a lot of times, we can at least get an idea, subject to a full, getting them the full application, which is a help.
Yeah, and I should say as well, because like when we liaise with the lenders as well, from a professional perspective, we can give them sort of an indication of the expectation on the suitability of the loan, right? And like based on what we've been seeing recently, as well as that whole time we're communicating with the borrower on what sort of common terms that we're sort of seeing to see whether that's suitable for them, how much they could potentially get, and all those things. So we're doing those channels at the same time. So theoretically, it's like speeding up, like when you're doing two things concurrently.
So it's kind of from what you guys are saying, it's about being that critical friend. It's about being somebody, like, I know I used the word in the intro, is kind of that powerful ally, but it's somebody who's kind of knows and has the expertise and is specialized in that area. You've seen how maybe with lending, the trends, and whether something is a good offer or whether it's not. Whether it's something that people should maybe consider or maybe whether there's negotiation or anything else that needs sort of shifting. And I suppose with that, because you're consistently having that dialogue with the banks, the differentiation between what people are looking for in terms of documentation, the types of communication that work most effective, and that kind of thing. So, that's a skill and a, I guess, rapport that you guys have built up since inception with 7 Mile. Is that right?
Yeah. I'd say as well, like we pride ourselves on being flexible in the communication, right? Greg is great. He's like one of the best people I've ever met. Like you pick up the phone, right? Like that, like if the person wants to pick up the phone or send a WhatsApp, like we have that ability. We also have built an online platform that mirrors sort of standard required documents, right? So we can like make sure that the fields are hit if someone prefers that kind of avenue. Like I think Greg and I are both like sort of in person, face to face, like type of people, but like there's different things that work at different times, especially as you move through the process. And you're not always going to get that kind of treatment if you go direct to a lender, just because they have formal processes, whereas we're acting on behalf of the borrower, right? Yeah. So it's that more personal. Again, it's a relationship that you guys can establish with the client. And we all know that in person is so much easier as well. You're able to like develop that understanding of the things that are important, because when we're talking about property, I think sometimes we don't necessarily talk enough about the emotional side of it, because it's a big deal. People are in some cases buying their first property, their first family home, investment property. Sometimes it's the biggest amount, there's savings that they've never had to allocate anywhere else. And so, you guys are part of that journey for them. And so, I'm sure that's it can be super stressful. You could have, been working with a developer who's building your first condominium or home or whatever it might be. And then it's been communicated to you that you can close. The developer is saying, I can't wait another week. I've got 5 buyers right behind you. Yeah. And it's like super stressed out and they never saw it coming. Right. And we can kind of add professional expertise there.
Awesome. Well, in terms of, we're going to kind of move on to sort of the lending piece and some of the more specifics around that. So obviously interest rate, we've briefly mentioned it, in terms of that's what some people, when we're looking at comparison, that's a key element. But are there other factors outside of looking at the lowest interest rate that people should be paying attention to from your perspective? I can see Will's like, absolutely.
Yeah. And there's things that can catch you off guard, even sort of down the road if it's your first time or your 5th time, I'd say. I mean, there's fixed and variable loans and different terms surrounding those, like what commitment and breakage fees. actual days interest, 360-day notes versus 365-day notes. I don't want to get like too technical, but there's at least right off the top, there's 6 or 7 terms that will differentiate a note, right? And sometimes it could be you could have all those be the same, and then one lender have few $1,000 commitment fee that another is willing to waive. Is that? I mean, could be as simple as that, but I guess the simplicity in the example is illustrative to show, like, if you're just going and getting one, and you're like, great, somebody's giving me a loan, and you go, well, you had a broker, sort of working on your behalf. You could have had the same note, but saved yourself $2,500. Like,
yeah,
genuinely, and it happens, and it's kind of crazy to say, but I think, again, going back to part of the reason like the business was started is to like act on behalf of the consumer and show the consumer that there's optionality there and competition.
Yeah, the banks don't like to necessarily admit it, but everything's negotiable. Yeah, life in general, but but to Will's point, when you're looking at like those one might have that commitment fee, but maybe that's the one you really want to go with because that's the one you've always banked with, and it's just actually going to be easier, and you have that relationship. But you could actually, then that's when I mean, obviously you could do that direct too, but if you have these other options, it's easy for us to go back and say, look, they really want to take this loan with you, but they are getting a better term here. If you can't match it, can you get closer? Is there anything we can do a little bit better? And work for the purchaser on that in that regard.
Yeah. I mean, to dive even deeper in that example, it could be the scenario where there's that fee, but you've always banked with them and you're comfortable. Okay. The competing offer is a lot better. Let's say it's lower interest, no fee. Require you to switch your banking relationship, have your salary deposited at their bank. You got to, switch over. There's one person, like person A, would be like, cool, no big deal. It's a better deal. Let's move it. The other person's like, oh my God, I've got my, whole life of transactions and all my, payees set up. And it's like, okay, like every solution suits a different person.
Yeah. And, it's that for some people it'll be convenience. And for some people they do, that cost saving might be, the biggest desirable priority in that whole process. So negotiation, and I think we touched on it in maybe episode 1 where we were talking about, the confidence of buyers as well, particularly, if you are a first time buyer, and how that can be quite intimidating because you maybe don't feel like you have the power to negotiate. This is black and white, this is what we're offering, or this is the process, this is the offer. And even from when we're at that, kind of placing an offer on a property or, a lot as well, it's knowing people can't, they can go for the asking price, they can make, an offer based off, what they have available or what their kind of preference is. And, the vendor then has the ability to counter or accept or decline, that's, yeah. But it doesn't come naturally and easy to some people. But I suppose with you guys in the field, on a regular basis, and again, having those relationships with the banks, that's something you guys are kind of confident with. And so you become that spokesperson on behalf of the client. So, is there any, I guess, ultimate success stories, obviously not giving any kind of specific details, but that you guys can think of where you were just like, this was such a great win for our client, and that was down to the power of negotiation or just having that kind of insight with regards to, actually there could be a better deal that we could make here?
I mean, I can think of kind of 2 which went different ways. One, the person really wanted some extra time on the loan, but they were approaching, the age of 6, they were, the typical age of 60. It was like they had 10 years, but we were able to, go back and say, look, this bank will go past. So what do you think? Can we, and we were able to make that work for them, get it to a term long enough that it did work financially. And same then with an interest rate. Another one where that's what, they really were like, to Will's point about we don't want to move, but this other bank is offering a much better rate, so we did. We went back and talked to the other bank, and sure enough, they're like, Oh, for them, yeah, we can do that. Yeah, that's not a problem. They're a good client of ours, customer of ours. We're happy to match if they can show that they truly have it. We're happy to match it.
Yeah, it's like a loan. If it's a loan the lender wants, right? Which we find, like we should say, like we find in Cayman, like it's like a victim of our own success to some degree. There's like very, very little to no default. So most loans are good and sensible, and so most lenders want them, right? So a small tweak to match or whatever, if you're the preferred lender, is not normally very difficult. I'll take like a bit of a tack on that question with a success story. And I think it was our first loan was it was for an investment property, and I think the success story was actually less with the borrower. The borrower was very happy. It was it was a 72-hour turnaround, and
wow.
It was more the developer that actually, like, the developer asked our borrower how in the world that happened. Right? Because
questioning, like, how did that happen?
Yeah, well, the developer had been experiencing frustration with getting, because they're quite different than like a retail mortgage where they'll pay interest by day on their notes. So they need to pay off their notes. And so that was like, proof in the pudding of like providing, speedy service and liquidity to the market. That's like, that's important and oftentimes I'd say overlooked. Yeah,
that's great. And so, I think, obviously when we're thinking about the people involved in the process, developers are such a key element, and, they're dealing with multiple, bodies within that sector and depending on how many developments they've got as well. So again, they're going to be looking for speed, they're going to be looking for efficiency. That's what it's all about. So I think in terms of that loyalty, just going back to what you were saying, Greg, in terms of somebody's in banking with, a particular branch for 20 years, etc., they've got a good reputation. How much does that really influence the ability for them to kind of wiggle room? What's the price of kind of loyalty and maybe even on island reputation as well? Like, do you find any of those things really have a big influence? Or
I would say it influences potentially the terms, but not the ability to get the loan.
Right.
Yeah, like they're not going to make exceptions on like on qualifying you per se.
Yes.
You're and they might not even offer it, but they're more likely than if you come back and say, I really need this. And it's got to be reasonable.
Yeah.
It'd be great if you walk in and say I have like a 3% loan now, and they're like, but then I think if you've been banking with them for a while, you work at one of the larger firms, especially if they have the firm banking with them, things like that. That can definitely help some of your terms for sure. But that's not going to change the approval process or the actual like qualification requirements, but it could help you get some better terms.
So if they were to take the bank, their loans officer to dinner, it's not necessarily going to be a make or break. Like we're not talking. No, it's not.
Where are we talking for dinner?
Exactly. That's a big factor.
I would suggest that loans here are probably much less commoditized than most places in the world, right? There is the relationship element where, Greg and I are both originally from the US, where borrowers would almost universally be agnostic to where their loan is coming from based on terms. Whereas here there'd be more of that relationship based, which is like, which is good and bad, right? Like it's good. It makes for a nice life. It makes you, it allows you to be able to call them up if like something's needed, but at the same time, it maybe like limits the optionality or the person's sort of reasoning to explore better terms, because a very, very minute change in terms, if you're intending, to buy a primary property or hold to maturity, very small, 10 basis points can, be the difference in, it depends on the size of the loan. That could be 15 or 20 grand in the life of a loan.
Yeah.
That's big, right? You might not notice it if it's a 25 year note every month, but like, you'd be silly to ignore that.
Yeah. for sure. And, this is impacting people's retirement. It's their, their long-term investment. It's, those things can't be ignored. But I think sometimes, again, you may find this with clients, it could be that, that here and now is so, that's the thing that's present in people's minds. So it's trying to get them to visualize that long-term impact. And do you guys typically do a lot of that, in conversation with clients on, obviously when we're looking at terms, duration, the length, the impact of, where are you going to be in 20 years time? Is this a property that you're looking to sell? Is this one that you're looking, is that kind of a conversation that comes up regularly with clients?
I would say it doesn't come up regularly, but the overall length of the term comes up for sure.
Yeah.
Then we can talk about and definitely talk about the advantage of a shorter one, because obviously you are paying much less interest over the life of the loan and things like that. But at the end of the day, the reality is for most people, it truly is about that monthly payment. And so while they would love to do a 10-year or 15-year mortgage to afford what they need to get, they do need that 25, 30-year mortgage. A lot of the time, sometimes, not always, but a lot of the times they do.
Yeah. I mean, it's not hyper complex either, right? Like, we're not financial advisors, but it's pretty simplistic to say a lot, like a common note, right, might have 5 or 6 key terms, right? And a lot of times 3 or 4 of those will be bang on. So there's not a ton of dials. It's more about getting, give me 2 or 3 to compare, or even if you don't, say instead of 3 to compare, if you've got 2, but factually the current rate at the other 2 lenders is, a quarter point higher, then you can leave it.
Yeah, for sure. Just before we move on to talk about, because I want to dive into understanding a little bit more about self-employed persons who are looking to kind of borrow. But do you think there's anything specific that you would recommend for people listening who are buying that they can do to make themselves more attractive to a lender? Maybe if you had like top 3 things that you would, say or suggest to people that they would make them more attractive.
I mean, honestly, just keep your other debt as low as possible. I mean, I know that isn't always possible, but avoiding especially like the credit cards and things like that. I mean, that just eats into your kind of debt service ratio really fast. And especially here, because here, and the other thing tricky here sometimes is it's not even always what your balance is. Sometimes it's what your limit is.
Right.
And then they take a percentage of that. And so even if you have a 0, then you're sitting there cutting down your limits, which is, theoretically fine. But, there's I guess just keeping it all balanced for lack of a better term.
Could we say accurate books and records?
Yeah.
Like, it's kind of a nerdy thing to say. I'm a CPA or I trade, but I think that's the one, common issue that I noted, is that you've got to get some kind of sign off from a finance professional that your income for a past number of periods is lining up to what you're claiming. Right? It's more difficult for self-employed, right? If you're not keeping accurate books and records. If you have somebody that's just got a job at a company, they can just pull up their pay slips or have their CFO sign a letter on their behalf. Or self-employed, you kind of need to be keeping records of that, which can be real difficult for small business and things like that. But it's it's just the name of the game.
So we've got accurate documents and kind of bookkeeping, and making sure that you're not going to go on a massive shopping spree in Miami, and take out a car loan and all of these exciting things before you're going to get pre-qualified and start to look at that property process. So, really, really key things when we're thinking about, how can you make yourself more attractive? So, Willie started talking about the self-employed applicant. So let's dive into that before we start to round off. So how do you find that people are evaluated in a different mindset to maybe a salaried employee? So self-employed, salaried employee, how are people maybe looking at them differently when they're going to borrow? Sorry.
Well, honestly, it does come down to the individual banks. Some are more lenient, not the right word, but I guess we'll count more of that self employment income as a percentage. So, it's some places treat it almost more like a bonus, because a lot of
Right.
times with bonuses, they'll give you 50% credit kind of towards your annual income for the qualification purposes. And some banks will, unfortunately with the self-employed, kind of look at it that way and say, maybe it's 60% or 70, but they'll discount it something.
Right.
Now, not all of them do that, but it is something you got to watch out for. But the accurate record thing, that's the biggest thing, is they want to see financial statements that are done by a CPA or accounting professional. It doesn't necessarily be a CPA, but a local accounting professional that has gone over the books, looked at them, and issued financial statements. And then also potentially we want to see your bank account and see that money actually come into your account. So it's not just sitting, you are paying yourself you're not,
Well,
it's not someone that's like, oh, my business made $1 million. Well, it turns out, you had 950,000 in expenses. So you really only made 50. They don't want to see that.
it's not just about the
They
cash.
want to see what's coming into your actual personal account. So
Sure.
just being able to verify. That's the biggest thing, is being able to prove it, I guess, is the
Yeah, and just showing the records that appropriate and associated. So obviously, we're talking almost the perspective of maybe a self-employed individual who owns their own small business, for example. But let's say somebody's a consultant working on behalf of different organizations and they've got different contracts. Is that kind of seen in the same guise, or how, do you get many people coming to kind of with that? Actually, this is a little bit.
If it's a contract that actually has like a long-term date, that's going to be great. If it's just
Short.
I would say it's actually, if it's open-ended, that almost wouldn't even be as good, because then they'd be like, well, it could end tomorrow. But yeah, I mean, having a contract like that, having something signed is also, that is good for sure.
Yes. Yeah. So it's that commitment to, again, that's that sort of income that's on a regular basis. It's the same amount. It's over a prolonged period of time. That gives, the lender that stability and security, that reassurance to know you're going to be able to make these payments.
Right.
Yeah. They don't want to foreclose as much as somebody want to be foreclosed upon,
Yeah. So you briefly mentioned about obviously bonuses, Greg. So in terms of, do lenders take any of those things into consideration, like bonuses, commission, any overseas income? And again, how much is that factored in? What does that look like when they're having that conversation?
I would say the standard is 50%. So if you got a $10,000 bonus this year, they'll count it as 5,000. If you got a $100,000 bonus, they'll count it as 50,000. And they'll divide that then by 12, and that they'll kind of attribute that to your monthly income for the purposes of qualifying, which is something you do sometimes have to take into, especially if you are heavy on like bonuses, that, oh yeah, it looks like I can easily afford this, but cash flow wise, can I afford this?
Yeah.
So it's just something to also sometimes think about.
Yeah.
If you have if you do it right and have the cash first, fine. But if you're
Yeah, exactly. Awesome. And I guess, it happens, people make mistakes, but is there one particular mistake that you may see with non-traditional kind of income individuals that they often make when they're applying? I know obviously you mentioned about the accurate records, which I imagine is probably one that comes up quite a bit, because depending on how, motivated you are for looking at books and looking at numbers, you might be one of those brains like, I just want to be out doing the doing. I don't want to be thinking about that. So I imagine that one comes up quite regularly. Is there anything else?
Just having, that is it. It's making sure that the records are there, and because that, you might be ready and ready to go. You found a place, but all of a sudden, you haven't kept your books for 3 years, and they want to see 3 years of income, proof of income and stuff. And now all of a sudden you're spending the next, 2 weeks digging through old bank records and all that, trying to, get it to an accountant who can then verify it too. It's not even just it's, that is.
It's like if you ever seen like Dragon's Den or Shark Tank, whatever, where they're like, the first pet peeve that like the investors have is like if the inventor doesn't know the numbers.
Yes, like, and they're stuttering and they're kind of panicking like rabbit in headlights. Like, I don't know.
If your books and records weren't totally like up to date and clear, but it's clear that you know the numbers and can pull up the bank statement and point to, oh yeah, this job I did for that, and on down the line, like it goes a long way in the confidence game, right? So we can pull it together. But it's like if you just go, oh, I'm not a numbers guy. It's like it's not an answer.
It's fake it till you make it, essentially.
Yeah.
even if you may be feeling that inside, it's like, look, when you're going to show up, you're going to know your numbers, and they're going to, that's it's a really critical one, because I think obviously people can sometimes overlook the fact it is a relationship, and obviously lenders are taking risks and buyers are taking risks, and everybody has their own motive and things that they're invested in the process. So it's that trust, essentially. It's trusting that this person's not trying to rip you off with interest and other elements, but it's also them having that confidence to say, like you say, we're not going to have to look at calling the terms on this, because actually you are going to make your payments, and we know that you are who you say you are, and you're doing what you're saying you're doing as well.
Yeah,
so
that's it.
So just a couple more questions before we wrap up. So it's a bit of I don't know if it's a heart tugging one for you guys, but can you share a real example? Will's like, what are you going to ask me? Can you share a real example of how working with a broker, obviously yourselves, made a really big difference to a client? Something that, a heartwarming story or incidents or situation that you can think of where you could quite clearly see. I know you guys get a lot of positive feedback and reviews and things of people that you work with, but any ones that stick out to mind?
I mean, I guess one that comes to mind was just someone that actually was, planning on leaving Ireland and ended up not, and suddenly found themselves in a position that they needed to purchase a property and close on it quickly. And we were able to, while they worked to identify the property, we were able to, in the background, start working with, reach out to a few banks and got, one that got on board and said, yeah, when you find it, we can make this happen.
Nice.
Just get everything to us now. We were doing it all. So it is like a pre-approval in that sense too, but we kept them up to date on, this is when it has to close by, because he has to close by this date. I think it was PR reasons or something, but and working with just staying on top of it. We by the time I think his offer was accepted, I think we closed valuation, official approval, closing, signed, everything done and dusted in under 2 weeks.
Were you guys a little nervous in that one? You were a bit like when this
but we did, and it wasn't like, and we didn't have room for error on that. So it was just, but we've been working with, we knew about it probably 2 months before. He probably had 2 months to do it, but trying to find the property, and he had one fall through, which didn't help, and things like that. So it was just, it got stressful in the end, but we were able to help him, and that was
there's an element there. There's an element there, correct me if I'm wrong as well, where there's individuals like the one in that situation has counted points on real estate investment towards their permanent residency, and like they think they dispose of what said real estate, and it's like you've got a 6-month grace period to get that back. And then when like Greg and I both have young families, right, and you get families involved, and like that just amps up the stress meter like 2-3x.
Yeah, but you guys strike me as calm, cool, and collected, which is exactly the type of people you need in that process. Or have I got that completely wrong? Is that
Try to be.
That goes back to your earlier question about like the value. It's like we act on behalf of the borrower, but it's a profession. Like it's not our personal dog in the fight, right? It's our client. So we can act professionally without, there's certain times it's like it's easy to take things personally.
Yeah, exactly.
Right? That aren't personal, or it's your priority, but it's not your lender's priority.
Yeah. And I think, that emotional communication and stuff as well, I think just having that, as almost a buffer to know that actually, you've got that, like I mentioned earlier, critical friend, voice of reason, somebody who's kind of looking more at the black and the white of it, but can also understand the emotional elements and empathize because you do it day in, day out, but actually maybe allows people to have that sense of clarity in decision making, which is ultimately where, they want to get the best deals. So sounds like an amazing service that you guys deliver. And I do want you to tell us a little bit about how people can find you, how they can access, your services. But just before we get to that, just one thing that you wish, both of you, so I'm coming to you, Greg, first, and then Will. One thing that you wish every buyer understood before they start the mortgage process.
Well, especially when they come to us, because we do get this sometimes. We get this a lot, and I wish we had a different answer for them. But I wish that they do understand that, as much as we work and want to make it happen, we still are restricted by the qualifications the banks have.
Right.
We're not a lender where we can say, actually we think that, like, it might sound great and we think it would be a good thing, but if it doesn't actually qualify in the right way, unfortunately there's nothing we can do. And there's times where
managing expectations.
That I would say that's one of the biggest things just that they come knowing that we will do our best and fight, but at the end of the day, it is, unfortunately, it's not our decision, I guess is the way to put it. And just that then they have their document, just everything they can kind of ready to go. And I shouldn't say that because that's part of what leading them to make sure they have it before we submit it. But just knowing that, it is still all the stuff, it's all the same requirements that the bank would have, I guess is my point. So when we start asking for it, we're going to get delayed too if you don't get it to us to get to the bank.
Yeah, you're not able to necessarily change that side of things, right. But you're working within the parameters of the lenders for sure.
Yeah,
thank you. A great one. Will, what about yourself?
Yeah, I mean, just understanding it's a hugely impactful financial decision, the biggest one that 99.9% of people will make. And so that's why, I mean, as a sales point, if you will, of the business, of just going like, we can defray your time requirements, right? Going and obtaining offers. But like, if it seems time consuming or stressful to obtain 3, like the value is typically going to repay itself in spades, right? Like one little minute difference, like I kind of referenced earlier, and that could save you $20,000 over the life of the loan. And it's like, it seems painful, but like, I think what consumers here typically experience, like we're trying to change that, right? And say, it's like, leave it in our hands. We'll make it not painful and we'll give you optionality, right? Which like the borrower here hasn't typically experienced. And so, and part and parcel of how we do that is offering it as, representing the borrower as a unpaid service to them.
Amazing. Thank you so much, both of you. There's been so much within this conversation that I'm sure our listeners can really benefit from, and just understanding, the process, but also, the value and the advantage of accessing a mortgage broker. So thank you so much for the conversation. It's been a pleasure to have you both on. Please, Will and Greg, tell us where people can come and find you, how to get in touch, so that they can come and ask you to help them with their next mortgage.
Yeah, sure. It's just mortgage.ky, really easy. There's a online platform there to submit an application, or there's a WhatsApp number on the page as well. It's real even if there's like up for an exploratory chat before making a formal submission, and we normally get back to those in like, same day.
Yeah.
Thank you so much. Well, it's been a pleasure to talk to you. Thank you to everybody who's tuned in to listen, and we look forward to any of your questions or topics that you maybe have off the back of today's conversation, or anything you want for future episodes. But for now, thank you both so much again, and we will be on to episode 4 next month. Take care, everybody.
Thanks, Ashley. Pleasure.